Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, now Captain Finance himself, Sully.
Wherever you are watching, wherever you are listening, we welcome you to the Big Biz Show. And as we like to say sometimes around this place, when we start the show,
a big old howdy to you.
That was Mike falling out of the building.
That's the Day Trader Trio. I'm Costa. That's the beautiful Mary Godwin. And that's the even more beautiful Sully.
We talked about 529 plans yesterday with Howie. We didn't talk to you about it. What's going on?
Well, I got to start cashing them out.
When did you start?
When they were little.
Oh, good.
But I didn't give very much. Like the $250 a month is more like $25 a month. So it's
but you still did something.
I did something.
Well, then you have $1,900 per person.
Yeah, I mean, there's just not a lot. But, you know, it'll cover books. But it's really good to know because I was told it wouldn't cover books. I was told there was a lot of restrictions on what it could go towards.
Right.
But turns out with this big bill.
Big beautiful bill. Oh, I hate to say it, don't you?
I'm not
beautiful bill. Is it benefiting you? Big beautiful benefiting bill?
Bit.
Is it making your America greater again?
Don't get me started.
So how do I remember when my girls were going to college?
Yes.
And I always thought, even though we could afford, fortunately, because we had saved in the 529 really diligently, that I'm a big believer that cash flow is more important than your mother. And I believe that using other people's money when it is at 1.6% interest was way better than paying for college. So I used the FAFSA program, the Parent Plus program, the student loan program, and all of it, and paid over time, and invested the difference with the money we had, and made money on the deal.
See, I don't know how to do all that stuff.
Yes, you do.
That just is.
Yeah, you do.
You lost me at the first.
Well, the point is, the point is that when you save money for 529, okay, instead of just paying for college, if they're offering grants and stuff, so my question to you is, are they offering grants? Are they offering the Parent Plus program? Are they offering those student loan, sort of add-ons to where you really can borrow money and go to college?
Yes, there are student loans that she can take, but I don't want her to take out a loan and have to be paying back a loan.
Why? You want to pay cash now? You don't want to pay cash?
Yeah.
No, you don't.
I would rather do that.
Why not invest that cash and make 7% per year and have her pay 2% per year?
But can I do that with money that I've saved in 529? Can I reinvest that again in something else?
Sure you can.
So this is where I need you
to
answer all my questions.
What happens if Tiffany, your daughter Tiffany, your granddaughter Tiffany, suddenly says, I'm not going to college? That money just doesn't go.
My younger daughter is thinking about not going. So she would possibly do the community college route, but she wants to go into the dance industry right away and put college off till maybe later or not at all. Depends on how it goes.
Exactly. So the point is that if you can repurpose money.
Yes.
And I think the penalties are significantly less than they were. But let's just say average return on investment, had you kept your money at risk over the last 15 years, is close to 10-11%. Okay. And if you're paying, even interest rates now on student loans are ridiculously low. And you're going to make out by investing the difference in terms of if you don't use that money for living expenses and you are diligent about investing it, you'll make more money investing it than you will.
Even with the penalty that I might be incurring.
Yeah, you will. And the thing is, look, I think that student loans should be the responsibility of the child.
Yes.
Okay? I made that mistake for the first couple of years, and I decided that as the kids are off the payroll, so to speak, it's time for you to cover your student loan. Now, you only have a couple of payments worth of it, but it also adds, when they become a responsible paying party, it adds their credit profile. And it ain't that much, number one. But the bottom line is, this is also why I think that forgiving auto loan debt is more important than forgiving student loan debt, because it's the same amount of money and it affects more people. I think at the end of the day.
Well, I think what she said, beginning of the discussion, I didn't know about all those different programs. That's the people aren't willing to take that next step and start jumping through the loopholes or the whole.
But I think the college and universities need to make it easier on you and say, here, your kid's going to college. Here are the 50 things you can do.
Absolutely.
Like in the first letter, not the welcome letter and the invoice.
Right.
Which is
remote parts of the world, it's known as the Large Financial Program. But most of the civilized world knows us as the Big Biz Show. We roll on for the Lot 100 Studios, Costa Mary Godwin, and Sully.
There we go. Is Howie with us? He was busy in our first segment. Howie Font, our analyst from New York City, shows up. Howie, I have a question for you in terms of how markets don't necessarily follow trends that you might think. For example, I've seen more companies put out bad earnings, yet their stock goes up. I've seen more companies talk about great news, typically in biotech sector, and the stock goes down. And I get a lot of email about this, and I know that you get a lot of questions as well about this, because you can invest in fundamentals, but I really think there's three things you need to look at when you're investing in anything. I think you need to look at the word on the street. What is the community talking about? What's the news talking about? I think you have to look at who's in the lunchroom, who's running the company. I think you have to, which is fundamentals, and then you look at the technical analysis. I think those are the three legs of the milking stool. Because if you don't, if you just look at what's in the news, rhyme doesn't reason hardly ever in this stuff. What do you have to say about that? Because I know that your fingers to the pulse of individual stocks as well as funds on a daily basis.
Yeah, I mean, I think that's pretty close to as spot on as you could get. I think if you don't know anything, then diversification is your friend. You trust diversification, you trust the index funds, and you ride that wave. You ride the S&P 500, the market that we talk about for things like the 529 account, the 7% growth, all that. If you think you know something, that's kind of crazy because it means.
I got a guy who knows a guy. Got a guy in the biotech.
Hey, this is going to happen.
No, I mean, if you've done fundamental analysis and you think you know what a company is worth and you can get it for 20% less than that or 100% less than that or some significant discount, you should be buying that company and you should be buying it at higher levels than an index would have any one individual company. So, I mean, then you have this diversification problem if you think you know something.
Yeah. Like, did I hear that right?
Yeah. No, it's true. Hi, here's a question. The sectors are always a safe bet, but the indices are a safer bet. In other words, if you want to diversify, in my mind, you could invest in, let's say you liked oil, you could buy an exchange-traded fund for USO, or if you like gold, you could buy IAU or GLD, which is a basket of gold stocks. But my two questions are this. I think it's smarter to buy a SPDR, the S&P as a whole, or the QQQ, the NASDAQ as a whole. But whatever happened to mutual funds? Remember the idea behind mutual funds was that you're going to diversify your equity, you're going to give your guy money, they're going to buy several stocks. And I know that the difference between exchange-traded fund and mutual funds is when you can trade it and how often you can trade it. But do mutual funds exist? Are they a piece of a person's portfolio anymore? Or have they gone the way of the dodo?
No. I mean, they've definitely had market share taken from them by ETFs, but they're still around in a big way. I think when you're talking about mutual funds versus ETFs, you're talking about fees, basically. And if you're going to buy a mutual fund, usually you're buying it for an extended period of time. And there's different fee structures. You can pay all the fees in the beginning. You can pay all the fees at the end. ETFs, you basically have it charged on you. They have an annual fee, but they charge it quarterly.
And plus, it's how you can trade it. Like, in other words, you can trade an exchange-traded fund during the day like a stock. On a mutual fund, you have to wait for the closing price. Right?
You would not be trading a mutual fund.
Right.
You buy it once and you leave it alone. That is psychologically very valuable, actually.
If you think in terms of diversification and a mix of investments, back in the 80s and the 70s, there was always physical gold, real estate, stocks, bonds, municipal bond funds, and cash, right? Then when you move forward in time, people start taking the physical gold off the table and this or that. What does a typical mix look like these days? Is it going back to the old days? Is there a brand new mix? Because now we've got crypto, we got bonds coming in here, and we've got derivatives. What's
This is a really interesting question. Well, I'll answer the last question first. Mark Cuban, as a general rule for young people, mid-20s, early 30s, say if you're comfortable with risk and if you have an emergency fund, go ahead and do like 10% into something like Bitcoin or some other really volatile, crazy thing. Because his rationale is you have to get the exposure. It's happening. It's a real thing.
But it's half-baked.
You don't know how to trade it.
But it's half-baked. And you don't know how to get your cash out of it.
Yeah.
I mean,
his rationale is also that, if you really want to trade this stuff, giving yourself that 10% cap on it is good discipline. Just say, all right, I'll have fun with 10% of my money, but everything after that, I do normal investing, ETFs, mutual funds, etc. Yeah.
Howie, this brings me to the question once again about Bitcoin. It's an investment vehicle. It's not a fungible asset that you can buy Tic Tacs and Slim Jims with.
It's kind of like Warren Buffett talks about this big Olympic pool-sized block of gold.
Yeah, all the gold. What he's referring to is all the gold fits in 2 Olympic-sized swimming pools. I think is what the rumor is. So continue.
Yeah. So imagine you just get all of it. It's bequeathed to you. It all comes in this big block. There's no more gold jewelry. There's nothing in a computer anymore. You have all the gold. And then you sit there and fondle it for 10 years. Then what do you have? You have all the gold.
All the gold.
But if you have farmland, or if you own, Apple stock, whatever, Apple's been paying you a dividend. The farmland's been giving you like bushels of wheat and meat and stuff, and it's grown in value. And you can take some of that to the market, then you can get some money, you can buy more farmland, compound. But if you have the gold, it's a non-productive asset basically.
Did you just say bushol? Did he also say hectare?
Bushel. He also said fondle.
Yeah.
Howie, I don't want you to go blind.
Howard, it brings me to the point when you start talking in terms of if you have all the gold, you have all the gold, right? It starts bringing up the question about asset classes, real estate to equities, right?
Let me go back on
because now you got a REIT, and now I'm in real estate, but I'm in equities, right?
Let me go back to your allocation point from before. Mark, I made the point about crypto that Mark Cuban has as a guideline, but just this week, Vanguard of all people, they're known for passive investing. This is where the spider ETFs come from. These guys put passive ETFs on the block. They're saying for the next decade, for the next 5 to 10 years, maybe a 70 bond, 30% stock is a better portfolio, which is basically the inverse of what we've always heard.
Yeah, I think if you think the way that Mark Cuban thinks, and remember the first thing he said, if you have an emergency fund, and you got some runway, then you can, and you've got money to invest. But I think the key here is you're out of credit card debt. You got money under the mattress, and you got 3 or 4 months worth of expenses.
No, that's got to be a given. Everybody, no investing until all your reverse investing is done.
Can I ask a real cool question?
Reverse investing. That means paying interest rates, by the way.
That's your debt.
No, interest rates. As far as a mutual fund is concerned, is there one interest rate that is going to generate, or is it an average of all the different aspects of it?
It's not an interest rate it generates. It generates a return.
I mean, a return.
And that's based upon the basket. So just a little infotainment here.
Please.
Let's say you have a mutual fund. Let's say it's a Vanguard mutual fund, and it's concentrating on biotech international.
Okay.
They're buying several international biotech companies, some private, some public, mostly public, depending on, let's just say public for the sake of mutual funds. And that's the sector for the mutual fund.
Okay.
Your return is based upon how that group does. Now, if one goes crazy and one takes in the yard. That's the idea, is you're diversifying the risk is what you're doing.
Gotcha.
And that return is basically one of the reasons why I tell people, I give Howie's phone number, I'll call Howie, he'll tell you. I tell people that have a 401k that have no idea what they're investing in. And every year they just go 30% here. You need to do a modicum of research. It is not, you don't need to be delving into the level that Howie and I do just because we're interested in it. But you do need to know what you're investing in. I guarantee you, Mary, for your 401k, you're investing in things that politically you would not be happy with. That's because you don't know.
Yeah, there are a lot of options, by the way.
I don't like that.
I am too. I mean, you know, listen, the baby seal eyes fund, but honestly, there's ethically speaking, there's certain things I know you wouldn't invest in. There's certain things I wouldn't invest in. And I'm not talking about illegal things, just part of your being wouldn't want to invest over here. I think if there's no other reason, that would be a reason for people to start doing some research. What's the best way to conduct due diligence on that, Howie, for people that are not in this like you and I are?
There are definitely restrictions, and by the way, those restrictions are loosening. For the first time this year, you're going to start to be able to buy crypto products or crypto-related products in your 401k. So that is new, and people have to really watch that because that could be dangerous. a portion of your allocation. But usually you're buying big index-based mutual funds or what's called target date funds. But many 401k providers also let you have check boxes that say, I'm not investing in defense, I'm not investing in tobacco, I'm not investing in X industry. And you have some filters like that. That's a newer thing, but it is possible.
I'm looking at Mary's 20% in conservatives for animal testing. I don't think you want to be in that.
No, but I didn't know about this check boxes. I'm going in today.
Mary's invested in harp seal blubber. All right, keep it here.
Oh, look at Trump. Oh, look at, she's got 10% Trump Tower.
Rhino horn jewelry.
This is freaking me out.
Big Biz Show rolling on. We're inside the Loft 100 studios here in Southern California. That is the Day Trader Trio. Best in the business. And back here at the bar, it is Costa, it is Mary Burt Godwin, and of course, it is Sully.
What? I was just using I was drinking some of James's
What is that? You're
probiotic
drinking?
kombucha, which is also my gang name. And the new name of the band.
I love it.
Ladies and gentlemen.
It's a lot on a t-shirt.
Kirk Huntsman, my good friend from Vivos. Before we bring Kirk on, actually let's bring Kirk on first because so many good things are happening with Kirk. There was an 8K he put out. 8K is when there's a material event in a publicly traded company that you have to announce that something material happened. And just a reminder, I got so many emails the other day. Our good friend Les Goldman, my longest running client, longest running guest in the publicly traded markets, passed away last weekend. And it was a horrible thing, but I got a lot of people emailing me about that. But that was a reason there was an 8K on that. That was a material event. So sorry, Les, to use your legacy to do infotainment and to educate. Kirk had a lot of stuff. Kirk, great to see you. Before we get to you, though, give us the latest on your journey with obstructive sleep apnea and your oral device from VivosLife.com. And
I just visited Dr. Perps, Sabine Perps, my dentist, who is helping me in my Vivos journey, and we adjusted the oral device a little bit, and it's working out swimmingly, and I feel great. But Kirk, Mary just asked me during the break, how is the snoring going? And I said,
you slept through it all. You never do. You snore anyway.
My wife, she will not wake up in the morning and say, oh, I know when you came to bed because you immediately lay down and start snoring. She doesn't know when I come to bed anymore.
Well, that's not new.
Well,
and that's not why.
No, but Kirk, there's no more elbowing, there's no more kicking, there's no more honey roll over, God please, and there's no more she's waking up exhausted. Because I'm not snoring and I'm not waking up exhausted.
And the reason I wanted to bring this up, Kirk, is because this is an oral device on the silent killer, obstructive sleep apnea, that you started doing, 4 months ago now? It was about 5 months?
No, we're about 6 or 7 months into it.
Yeah, and you've lost weight, you're sleeping better. And the reason I wanted to bring that up is because of your sleep center acquisitions that you're talking about, and the 8K events that you're talking about kind of go hand in hand on why you're becoming so successful in that business and new revenue model. Kirk, great to see you. Talk about what's going on there, because that was really falls right in line with what Mike's experiencing with all your new patients.
Yeah, so this is all in connection with the acquisition of Sleep Center of Nevada. This is one of the larger sleep testing groups in the entire Western United States. They're the largest in Nevada, but they test a lot of patients. And the good news is that now that we've had some time to sort of look under the sheets and see what we bought, we are thrilled to report that we're seeing some huge success. It's exceeding all of the expectations that we had laid out for ourselves, our forecasts. We have deployed already 1.5 what we're calling sleep optimization teams. And these guys are, each team, we've identified the ability to generate about $500,000 in net revenues per month. The cost of that team is, just in labor costs is about 20%. So we have a huge profit margin potential there, very accretive revenue, and very profitable revenue for Vivos. So
did you think in the beginning, because you were just selling devices in the beginning, first of all, it was a biopharma, bio device company that had to get through FDA, had to get through all the trials and testing and safety and such, and you were just going to sell devices. Now this is a new funnel. Did you know this funnel was coming in the beginning, or is this something that was a mother of invention, a necessity, or was it simply something that was on the radar from the very beginning?
This management team has been led to this point. We originally started before I put Vivos together. I actually was one of the pioneers in the dental practice roll-up called the DSO business, and so my management team has extensive background in operating professional practices. So when we came to the realization that the dental community was just not going to carry the water for us as a channel of distribution, we were able to pivot into something that was right up our alley in operating professional clinics. So we went out and bought this first one in Nevada. We've got several of them really across the country. My team gave me a great report about an hour ago of another one out in Maryland. So we've got literally opportunities that are just coming in every week of practitioners that are hearing what we're doing. And the key thing is that they've been working with CPAP for years and years, and they know it's a terrible option. And so when they hear that we have a FDA cleared for severe treatment and it's safe and it's effective, they are calling us to get on board, and it's just so gratifying. It's just, we're going to be able to scale this business now in ways we had. To your question, no, I never really thought. I thought the dentists were going to carry the water for us. They're not going to do it. So
well, I mean, but who better to sell your product than you? I mean, that really comes down to basics, right? I mean, it's you've got boots on the ground there with your sleep optimization folks, and it's converting.
Kirk Huntsman, he and his team have literally given me a significant part of my life back. CEO of Vivos, their Vivos Therapeutics, ticker symbol is VVOS.
Hey, Kirk, I have a couple of questions for you, but first I want to know if your ears were ringing on Saturday night, because I was sitting around with a bunch of my girlfriends, and I swear 4 out of the 5 of them were complaining about their husband snoring. And there was a 10, 20-minute conversation.
Remember the conversations you had when you were 20 and 30?
Yeah, it's a lot different now. It was hot flashes and kicking their husbands. Okay, so.
Back when you guys had book night, book club back when you're 30s, is a little different conversation.
Exactly right.
Well, I'll tell you, I'm thinking about some Depends after I get the
We're not there yet, but that might be in a few years. Anyway, I linked them all to your website. And so, speaking of this, it's not the dental practitioner maybe way, but to explain these sleep centers and what is the best way they're going to log onto your website, and then where are they going to be directed to? Because you're going to get at least 5 new customers.
So we still have 2,000 dentists around the country that are trained and capable of performing these services. The issue is that they're not really. It's not a driver for them in their practice. It's not a focal point for them in their practice. And so what happens is, unless somebody comes to them and asks for it, they're just not doing it. So, but it has nothing to do with the technology or the products themselves.
Right.
It has to do with the focus of the dentist. Yeah. So what we've effectively done is said, okay, when patients potentially have sleep apnea, they're typically showing up at their primary care physician, a cardiology appointment, whatever it is.
Yep.
And they're being referred to a sleep center. That's where the patients go to get tested. So there's 300,000 sleep tests a month that are performed in the United States. 90% of those patients have sleep apnea. And so what happens is that once they get this diagnosis, their biggest question is, well, now what do I do?
Right.
And the only solution is you got to go play Darth Vader every night in the bedroom. Nobody wants to do that.
Right.
And so they, I promise you, the husbands of all your girlfriends do not want to be Darth Vader in the bedroom.
Right.
And the husbands
they're having enough problems already.
And
right?
the girlfriends themselves, while they're talking, are doing this.
Exactly right. Don't mess with me.
If I'm not mistaken.
Okay?
Exactly right.
Kirk Huntsman is the CEO of Vivos Therapeutics. I'm telling you, and in all honesty, gave me my life back. Ticker symbol is VVOS. Lose the Darth Vader. But don't lose the show. We'll be right back. We are in the Loft 100 studios in Southern California. Wherever you're watching, wherever you're listening, thank you for being along for the ride on the Big Biz Show. That is the Day Trader Trio. Love those guys. As I always say, no less than self-taught. Back here at the bar, it is Costa. It's Mary Burt Godwin, Marley Burt Godwin, and of course, Sully.
Mike has a body of work. What does that stand for, Michael?
I know.
Dang it, I forgot. You said it. Last time we had him on, you said it.
What?
Tick Mary, she has her hand up.
A big ol' howdy
Oh,
to ya.
God, sorry.
Troy Hazard, my good friend, TroyHazard.com, keynote speaker, author, and good friend of the program here on the show. And I give him a hello only to ask you this real quick. Have you ever, Michael, or ever, Mary, or James, or Trace, or Brian, loaned money to a relative?
Oh, yeah.
Yes.
See, I never have. I just give it away. Because
it's not a loan. It's a gift.
Well, it was presented to me as a loan.
Of course it is.
But
Just like with your dad.
Exactly.
Troy?
I swear to God, I'll pay you back.
Troy, is it the same thing when you're talking about loaning money to a relative and going to business? Because I'm not suggesting it's never a good idea to loan money to a relative. Just understand you're not going to get it back.
True.
And if you set those expectations, you're probably okay.
Going into business is way worse.
I was going to say.
It's worse than losing money to your dad.
Oh, yeah.
Perfect.
Yeah. That's losing money you haven't got.
Well, the funny part is this is usually happening after a couple of pops around a dinner table with the whole family together during the holidays.
You got softened
Me
up.
and Troy are starting a gun range.
Back into summer, everyone's been having those conversations. I hate my job, I hate my life, I want to go and do something. And then after the second or third beer, we come up with a good idea and away we go and we have this fabulous business idea that we fall in love with. And look, I've done that myself. I can recall a time back in 2001, I went to lunch with a mate of mine. First bottle of wine, we decided we're maybe going to buy an internet company. Third bottle of wine, we'd made an offer. It wasn't a good idea.
Always great to be making decisions when you're not 100%
alcohol
capacity.
out of it.
Talk about that, though. This is interesting because it seems like a good idea sometimes because you know them, they're family after all. You trust them and everything else. But there's, it's sort of like I tell some of my friends, acquaintances, and I don't mean to be glib about this, but I have friends who are maybe stepping out of their relationship with their girlfriend or even some gals are stepping out of it, and I say, did you play the videotape out to the end of the video? Seems like a great idea at the time, but what does it really look like? Mm-hmm. You got to do the same thing in this, right, Troy?
Yeah, look, what we need to focus on was when we're with family, we feel comfortable and we can have an open and real conversation until it gets a little bit messy. So my first, I suppose, small piece of advice is if you're going to have these conversations, make them creative, but make them constructive in that you are working towards a goal that if you do decide to go into business together, you've got it all documented. You're a partnership agreement in place. You've got all your shareholder arrangements in place. And so if something does go sideways or the pressure is felt, then it's a little bit easier for you to refer back to a document to talk your way through issues rather than trying to do it over the dinner table.
And let's talk about that because you do business in the name of good business. You do business with the purpose of going forward together, but there's a reason you have an agreement. And there's a reason, and I can tell you just in my life, I've only had 2 arrangements go south, and one of them went recently. And thank goodness I had all of my documentation in place because it was just clear that A didn't equal B in terms of this. Now, here's my question though: isn't documentation along the way, memorializing conversations via email or via text and saving those, as important as papering a deal in terms of shareholder equity operation agreement, LLC, so on and so forth?
Well, absolutely. I think when you get to a mediation process or you're having a conversation about a tough topic, then it's an opportunity to reflect back on the conversation that got you there in the first place. Because typically when those things happen, it's a miscommunication, a misunderstanding, or people have just misread the circumstance they've got themselves into. So any communication is helpful. But at the end of the day, we sometimes don't want to document it or turn it into agreement
particularly with friends or family, because we feel like that's a little bit too formal. It needs to be, because under stress and pressure, all those things are brought to the surface, and unless you've got a go-to, then it becomes a little bit messy.
It's the prenuptial problem, right, Troy?
Mm-hmm.
It's the prenuptial. Look at it, it's an uncomfortable thing to talk about, but you sort of need to, if you're on if you're Leisure Suit Larry on marriage number 5 and you have some assets, maybe it's time to do a prenuptial agreement. And those are uncomfortable to talk about, just like agreements for operations agreements and joint venture partnerships are also uncomfortable.
Well, exactly, and with all these circumstances, communication is key. And even look, Dominic and I are our own little ecosystem in our businesses that we're involved in, but we make a real effort to go to lunch at least twice a week, to have a mini board meeting and to connect on the communication that surrounds the business operations or the investments that we're making. So just to make sure that we're away from the noise, from the kids and anybody else, and we're having a real frank conversation about what direction we want to take. And it happened as recent as yesterday. Without that continuity in those conversations, interpretation then takes control, and that's when things get a little bit out of shape.
Yeah. Troy Hazard wrote The Naked Entrepreneur, A Millionaire's Journey from Fear to True Wealth. TroyHazard.com is his website, and his shirts always match his artwork, which is pretty cool. Troy, how would you say, what do you think the percentage of people out there who they come up with this mindset, well, they're family. I don't need any sort of written documentation. I don't, handshake is the best deal. I don't need it documented.
You just can't do that. I mean, you'd like to think that you can trust family and friends and you know each other and you've grown up together or you've been mates for 40 years or whatever.
Yep.
But pressure does strange things to people. In fact, it reveals a character you may not really thought you had in the first place. And when that happens, it's just a go-to to have everyone back on the same page and having an adult conversation about an issue that neither of you could maybe have predicted, but it's come up in front of you and you have to work your way through it, or you stand to lose a substantial amount of everything, really, money, life.
Yeah. Troy, this is what I call the ticked-off husband syndrome. The ticked-off husband syndrome, or ticked-off ex-husband syndrome. Let's say you're doing business with your cousin Susan. Everything's going fine until Susan gets a divorce, and ticked-off Susan's husband. I mean, honestly, it's the third party sometimes that you don't look for that sort of pin somebody in a corner of having to go in a different direction than what your agreement is. I think the first thing you said is take a 50,000 view, do the paperwork in advance, but make yourself, you don't want to go in there with the idea of this is going to fail, but you know what? There's reasons that the court system is backed up 7, 8, 9 years with torts of people and claims of people getting into business disputes. You never go into this thing thinking it's going to be a business dispute, but it happens, and sometimes it's for reasons that aren't even your fault.
Well, that's it. And you make a classic example in divorce, health, people moving, children, whatever. All these things influence our lives. And in all of my agreements with my business partners around the world, we have provision for those things to get in the way. Provision for divorce, provision for some sort of sickness or even death for that matter, God forbid. These things will get in the way, and if you've got nothing to go back to reference what you're supposed to do, then it becomes total chaos. And with chaos, everyone starts to get a little bit more anxious about what the outcome's going to be, because we've all got a lot on the line, and we want to try and work through the process to make sure we don't lose everything that we've got on the line and can find a way out.
Hey, Troy, I wanted to ask you about, it seems like maybe family members might have this thing where they might want to not disclose things and maybe not fudge the truth, but, maybe not tell their...
Errors of omission.
Yeah, exactly right.
Yes,
exactly right. But that's a huge part of it, and that you'd think that you'd need to have that agreement up front.
Well, it's your point before Troy answers that. In a publicly traded company, okay? For example, I want to express my condolences to Northwest Bio Therapeutics. My good friend and my longest running client, Les Goldman, passed away over the weekend. They had to, because he's an executive VP of a publicly traded corporation, put a press release out.
Yeah.
Because by not doing that, or if you have a CEO of a publicly traded company that has, let's say, a life-threatening illness, you have to put the news out, because the omission of that causes people to make decisions without that. To your point, Mary, it's such a great point.
I think it would be really relevant, or what's the word I want to say? Happen often with family members, because you just think they don't need to know that little thing. Right.
Well, it is, because there's usually one member of the family or one member of the partnership, whether they're friends or family, that has the idea in the first place, and they're emotionally involved in that idea. They've fallen in love with the concept.
Oh no. That's not a good idea to fall in love with a deal or a stock.
Never fall in love with a deal or an asset.
Yeah.
Never, ever. But it happens all the time. So we've got to dig deeper into the real situation of what you're trying to get into or considering what you're going to get into to make sure that we've looked at the good things and the bad things. We've looked for skeletons. We've made sure we've looked at the risk that's associated with it. And moreover, we're all prepared to lose. When Dom and I make a decision to go into an investment or a new business or something, we make a decision. We are prepared to lose this much money on that arrangement, and anything more than that becomes above our risk profile. And so we're clear that it might all just disappear, but at exactly the same time, that consciousness brings up a desire to want to dig deeper to understand what the real position of the business is or the investment you're making.
Will you make the decision to come out to San Diego soon, please? Come on. I miss you.
Come on.
I haven't, my beer consumption goes way down when I'm not with Troy, which is probably a good thing.
Troy Hazard,
You got a business idea, mate, that you need to look at?
Keynote speaker extraordinaire, great friend of the show. TroyHazard.com is the website. Author, The Naked Entrepreneur, A Millionaire's Journey from Fear to True Wealth. Hey, they're live from the Loft 100 studios in sunny San Diego, California. Big Biz Show's on the air. Great to have you along today. Wow. Have you seen the stock market? Have you even looked? Do you even look at the stock market? What? You know, the guys in the band even look at the stock market. You don't look at the stock market at all? I know you have retirement investing.
I do, but my days are too full. I too much going on. That's just not on the top of my list. No, not as frequently as you. I do it. I do, yes, but not as frequently as you do.
Check your bank balance?
I'm juggling all the different things.
I'm just showing you how easy it is as I'm on the air.
Yes.
To check the stock market.
Yes.
Here we go. Boom.
I'm juggling about 40,000 other things.
Oh, you are?
Aside from...
Oh, you are. Okay, is this Maccecchini or Maccecchini?
Maccecchini.
Maccecchini. See, I had to hold on.
Dr. Maccecchini.
Tell me about Maria.
Oh, she's fabulous.
She's a
kidding me?
This is Annovis
This is
Bio?
amazing.
Okay.
Yeah.
Alzheimer's work.
Yes.
Is she here?
Well,
is she in studio?
Now, define here.
Yeah.
Is she
because if she's here via Zoom, yes.
Do we have a present CEO of a biotech company on the show?
Yes.
Wow, you guys are important. Maria, sorry I messed up your name so badly.
No, it was perfect. It was absolutely perfect.
Molto bene.
See.
Let me ask you something. When we talk about Alzheimer's, before we talk about your company, how are we doing overall in this arc of the story for the disease, globally and in the U.S., in your opinion?
We are doing pretty badly. And the reason is there aren't any good drugs. The drugs that are on the market have an effect, but a minor effect. And then people spend a lot of money on what I think is sold to them as, it may help your brain, and people pay. And it doesn't really help your brain. So somebody was saying something about a shopping list. Maybe the best way right now to stave off Alzheimer's is shop the right stuff.
Yeah.
Stay healthy.
Let's talk about Annovis and what makes you different, because a lot of this problem is toxicity and so on and so forth. And I know that because I'm starting to see the early signs with my own mother. Talk about what's going on and what makes you sort of the tiebreaker in terms of drug development and drug delivery development, so on and so forth.
Well, as the brain ages, and also as it has infarcts, it has other injuries. You may have hit your head when you were 15, and eventually the brain will say, okay, this old injury is coming back to haunt me. But as the brain has more and more injuries and ages, what happens is that it accumulates toxic proteins, toxic stuff, which kills your nerve cells. And basically what we're doing, we are removing that toxic stuff.
I think when you talk about toxic stuff, can you be specific? Because is it created because of the treatment? Is it created within you? Where does that emanate from?
It's created within us. We make proteins that have a function. Okay, they help synaptic transmission. They help you think. They help you move. They help you do things. And as they get old, they become kind of crooked. They become little blobs like plaques or tangles, and then they're toxic. So something that we have had all our lives that has helped us to think and to move and to be a normal human being turns against us because they get old and decrepit and they become toxic.
Dr. Maccecchini, can you talk a little bit about your lead drug candidate? I think it's buntitap. Am I saying that correctly?
That is correct. You also said my name correctly.
All
Thank
right.
you.
I practiced.
Look at this.
I practiced.
Even a broken clock is correct twice a day.
Oh, be nice to her.
Thank you. I'm the only female around here, except for Chris in our control room, so thank you. So yeah, can you talk about where you're at in the arc of buntitap and how that can help? I think it helps diminish the proteins you were just talking about.
Yes.
Is that accurate?
Yes, exactly. So I was saying you get all this decrepit old stuff that kills your nerve cells, and our drug makes it not do it. And so the nerve cells survive, the brain keeps functioning, and that's really what you need to think normally and to not get Alzheimer's, or if you have Alzheimer's, not to progress.
Oh yeah, that's
we are in phase 3, which means we have treated over 1,000 patients. So we are really at the last step of development. We need to do one more study. It's a big study. It's 750 patients and it's 18 months. But that's the last study. Then we'll be on the market.
Maria, I have a question about your other drugs. As you look at that FDA chart there that you see on your website, and I see some other therapies there. Talk about that and what they do.
So Parkinson's is the same drug. What is interesting for a regular person today is that there are drugs out in the market that actually could help you. And as you see in the purple in the middle, it is buntanetap with Trulicity, which is a GLP-1 agonist, buntanetap with Viagra, which is a PDE4 inhibitor, and then buntanetap with both. Now, why is that? If you think that in order to be healthy, I was telling you, buy the right stuff, go to the supermarket and buy fresh food. Well, food and diet is very important for your brain. That's really where Trulicity comes in, or GLP-1 agonist. They regulate sugar metabolism. You could do the exact same thing with good diet.
No kidding.
And then you need good blood circulation, because good blood circulation cleans up your brain, it keeps your heart healthy, and that is Viagra. So if you combine Trulicity with Viagra with our drug, you do really well.
The interesting part of this is, for many people, Maria, when they're hearing about this, they're already in their 50s or late 40s or even even older. Is this something that they can change their diet and change their activity to do this, or are they subject to just having to do medical therapies going forward?
You know, that's an excellent question. One of the difficulties about giving you a really good answer is how long do you have to be healthy? What we know for a fact, if you start at 75, 80, you could just forget it. I mean, it's a terrible thing to say, but your body has already had too many negatives. Your heart is already very much impaired, your sugar metabolism, your diabetes, whatever. But if you start at 60, could you be 65? Could you be 70? We really don't know that.
Yeah.
But the earlier, the better. And I think overall people think that up until 70, you have a chance of changing your life.
Maria Maccecchini is her name, founder, president, and CEO. Did I say that right?
Maccecchini.
Perfect. Come on, tell him perfect.
Nobody ever tells me this. Will you come back on the air with us and hang out with us more?
She's so nice.
Will you come back at another date, please? We'd love to have you back.
I have some more
Only if you
questions.
give me a whiskey.
You know what? You're coming in studio.
That's right.
Stock symbol ANVS. Big Biz Show. Stand by.